أيها الذين آمنوا اتقوا الله وذروا ما بقي من الربا إن كنتم مؤمنين فإن لم تفعلوا فأذنوا بحرب من الله ورسوله.
According to the economic history of Europe, there is a clear distinction between usury and interest. In general, there are many views from the Western perspective in regards to the real concept of usury. The Oxford Shorter Dictionary on Historical Principles describes usury as the act of lending money with an illegal rate of interest, while the Macquarie Dictionary refers usury as an excessive amount of interest, especially one that is higher than the legal rate. Usury originated from the Latin word usura, that is literally defined as use, which means the price of using money. The word interest came from the word interio, which means loss. It refers to the loss of opportunity. It can be explained as the compensation for the loss of opportunity of the creditor, rather than just compensation for delayed payment. Based on these definitions, we can clearly see that usury and interest mean the same in today's world, where both hold the meaning of extra money. The study of riba has been discussed for more than 2,000 years ago, not only by Muslims, but also by non-Muslims such as Hindu, Buddhist, Jewish, Greek, Roman, and Christian, and according to the Jews, it is called as nashakh, which brings the meaning of forbidden and despised. The prohibitions of riba among Jews have been widely emphasized in their Old Testament and in Talmud laws. Riba became a popular practice during the time of the ancient Greeks and Romans. However, some of the Greek and Roman philosophers such as Plato, Aristotle, Cato, Cicero, and Seneca criticized the practice of interest as inhuman. This shows that historically, interest has long been opposed due to the social divisions it causes and the hardship it brings to the borrowers. Christians hold different views. During the early period, the early Christian pastors did not allow the act of interest due to the laws from the Old Testament. However, some Christian scholars began to allow it, using new ground in which they allowed interest but forbade usury, stating that usury is excessive interest. The Reformation period shows that most dictionary definitions of usury are incorrect because they confuse the key distinction between usury and interest. To add, the Christian reformers started to justify and encourage the application of interest in the Christianity. It is widely believed that usury has been on the decline since the 16th century, but with the gradual acceptance of the legitimacy of charging interest. From the Islamic perspective, riba was strictly prohibited. However, during the early stage of Islam, the prohibition of riba was revealed gradually in stages in order to keep up with the society's readiness. The first revelation about the prohibition was revealed in Mecca, stating that interest lessens Allah's blessings while charity multiplies it. Then, it was severely condemned during the second revelation in Medina. During the second or third year of Hijrah, the third verse was revealed emphasizing that Muslims should avoid riba to protect their own welfare. The fourth revelation got stricter when the Quran declared to the people who take riba to be at war with Allah and the Prophet. The word riba, which was mentioned 20 times in the Quran, brings many meanings such as expand, fertilize, growth, and many more, but generally it means to grow. In general definition, riba is known as profit that is enjoyed by only one of the parties in a transaction of sale or exchange, while the other party will suffer loss. In other terms, it is an additional payment made by a debtor to the creditor due to the late repayment of loan. During the Prophet's time, borrowing money was done and practiced as a trade for investment as well as consumption purposes, where the lender would profit from the loan trade. This obviously leads to injustice and oppression. While for riba al-fadl, it is an unequal exchange of commodities of the same nature made by the involved parties during a trade. Even though Islam allows trade, not everything in trade is permissible. If it involves injustice and dishonesty, then the trade is prohibited. To add, the main reason for the prohibition of riba al-fadl is also to close the back door to riba. Interest is frequently associated with the exploitation of those in need, as a borrower must face difficulties. Obviously, lending on the basis of interest is considered bad practice because the borrowers are in dire burden since they need to pay both the interest rate and the capital. The critiques from those Western scholars on why interest should be prohibited are somehow similar to Islamic point of view. In other words, the main reason is to avoid exploitation and unfairness occurring in any transactions.
There are many different interpretations of riba and usury from various scholars, from both Islamic and Western scholars. So we are going to elaborate on how riba and usury have been seen between these two perspectives. Islamic scholars were emphasized by Ibn Qayyim, Ibn Rashid al-Ghazali, and Ibn Taymiyyah, while the Western scholars are Max Weber, Karl Marx, Baumgartner, and John Maynard Keynes. This issue obviously being practiced in conventional financial institutions, and surprisingly, it also exists in Islamic financial institutions as well. This contradicts with the real purpose of Sharia, while prohibits the act to impose additional charges, as it was also stressed in the Quran and Hadith. The first view from the Islamic scholars is by Ibn Qayyim. He has contributed in many fields of knowledge, including the Islamic economic philosophy. From the perspective of Ibn Qayyim, the act of taking interest considered as contradicting the zakat and is strongly prohibited in Islam because it could harm the society through injustice and exploitation. According to him, riba is divided into two, riba jali and riba khafi. He also mentioned that the conventional interest payment was mostly being made by the poor during the period before Islam due to them constantly borrowing money. He emphasized that riba is prohibited due to the nature, aims, and objective of the action, and not just because of its name or form. Ibn Qayyim's opinion is in line with what Rasulullah ﷺ has clarified, which is only deferred payment is prohibited, because according to him, the nature, quality, and function of the exchange item are different, hence the difference in quantity is allowed. Secondly, from the opinion of Ibn Rashid, he separated riba into two types, loan riba and sales riba, which ulama have agreed that riba is present in two transactions in sales and in acknowledged debts about advanced sales or loan. The Sunnah and Ibn Rashid's belief have led to the establishment of a system for monetizing transactions and aim at reducing exploitative activities that are prevalent in barter trades. Islam promotes the formation of market value for commodities and much equitable exchanges by encouraging the monetization of trade. Ibn Rashid explains that the controversial nature of riba is due to the drawing of analogy from the prohibitions found in the prophetic teachings. For Ibn Rashid, it was the problematic nature of the analogies used by the Sunni schools of law that created substantially different interpretations of the scope of the riba prohibitions. Al-Ghazali has made a very notable contributions to economic thought on the issue of money and interest. He has also come up with a deep discussion and justification on the issues of barter exchange, functions of money as well as the evolution of money. Al-Ghazali recognized the issues of inseparable and double coincidence of money, where two people happen to swap their goods in exchange for another, and the various role of money in solving this barter problem. There are other scholars who share the same views with him. He disapproved of the emergence of fraud and debasement of currency, which is called Gresham's law, where bad money drives out good money, which means that the coins with different intrinsic value, the coins with cheaper metal will be used for payment and become a source of profit, while the coins with more expensive metal will be exported. Al-Ghazali disagreed with money grubbing and charging riba or interest as both actions will violate the real functions of money as a medium of exchange and measure of value. It is no doubt that interest indeed will have a significant impact and become a threat to stability in financial intermediaries, especially in the case of lending money. Ibn Taymiyyah is known for sharing the same views like Al-Ghazali, but soon he laid out some additional opinion on his own and provided a new definition on this issue that is clearer than Al-Ghazali. Ibn Taymiyyah termed tamaniya as a reason for prohibition where there are two metals used. It is similar to the prohibition of riba, where two similar commodities are exchanged with unequal weights and are delayed in the transfer of the commodity. Hence, Ibn Taymiyyah justified the term tamaniya as a reason for riba because the money is meant to be the value of measurement, unit of account, and a medium of exchange, and that means it was never meant to be used for the money itself. He was also trying to indicate that there should be a balance between the volume of money and the volume of the transaction to prevent no one from making profit. Weber addressed the issue of usury in his first book he published in 1889. That includes three important arguments about usury. First, he does not claim that usury regulates had no effect. The ban of interest was the restraining factor for the former, while it contributed to the downfall of the there ad proficium maris. which was predicated on the capitalist readiness, that means to donate for the purpose of making a profit or maritime trips. It also put a partnership at risk of being accused of usury, which ultimately led to its collapse. As a result, the usury prohibition was not totally ineffective. He claims that the usury restriction had just a minor impact on their partnerships. Investment loans were more vital for economic development than consumption loans, and capital found ready investment opportunities in various forms of partnerships. A partner who gave cash ran the danger of losing it, yet he could legitimately make a profit if he got active in the business. Taking such a profit was considered quite distinct from taking interest on a loan, which was forbidden with certain exceptions. As a result, most of the trade associations who were investigated were exempt from the usury law. And finally, his third point is that the establishment of stricter usury regulation and the legal evolution of partnership in the later Middle Ages occurred at different times. Since the restriction applied to all loans, yet usury issues could be addressed far more easily in investment credit transactions. According to Karl Marx, both profit and interest rate are different. He stated that profit arises from the surplus value due to the production activities by the firm. Nevertheless, the firm cannot enjoy the whole profit because their investment is financed by borrowing money capital that is provided by the financial capitalist, and in return for this service, the financial capitalist or the banker demands some portion of the firm's profit to be paid as interest. Furthermore, Karl Marx considers it absurd to suggest that interest is a reward for users refraining because excluding money from circulation will automatically hinder itself expansion as capital. Karl Marx generally stated that rate of interest fluctuates in every business cycle in which it depends on the liquidity dependence of the firms. For example, the interest rate is the highest during the crisis when many people want to borrow money to settle their payment. To add, interest has no relationship with the productivity of the capital. Hence, Karl Marx believed that it is unjustifiable to think that money is able to grow and expand on its own. Next, Mohamed thoroughly explained that interest in detail in his work of Theory of Capital and Interest in 1884. The theory of interest is made up of many suggestions he thought could cover up the holes in the theory from the other economists. For example, the theory of productivity, exploitation theories, and many more. He also believed that his work of time-related theory of interest was transparent regarding the nature of interest in terms of payment for time. His work stressed the importance of time as a key in determining a certain value of goods and services, as the interest rate is believed as a cost that occurred from the use of capital. He believed that the triggering in the interest to occur was mainly because of the confusion made by the economist itself in both theoretical as well as the social problem. He also believed that the essence of the social question is actually meant for the distribution of property, when it's like the pathway between interest and the distribution of property. Distribution of property is commonly discussed together with the problem of when the rich tend to get richer and the poorer get poorer, which become more familiar to happen day by day. Keynes is very known in economics world. Theory of interest rate, which is later known as the Keynesian theory, that emphasizes the market interest rate or the rate administrating funds that are currently being supplied. He added that the market interest rate relies on the demand and supply of money. Certainly, the price which brings into equilibrium between the willingness to hold the cash and the supply of cash resources. Furthermore, he viewed interest rate as the achievement for parting with liquidity and believed that liquidity preference as the foundation for money demand theory, while money supply was seen as a subjective factor that depends on the monetary authority's decision on the policy. Keynes also made clear about the importance of the state's and authority's role in stimulate productivity of the money and fulfill liquidity preference.
Riba is one of the most destructive sins in Islam, and many Muslims unfortunately have become very complacent regarding riba and dealing with riba. Either it could be through their ignorance, lack of knowledge, it could be because they underestimate the sin, or it could be their lack of fear or taqwa of Allah subhanahu wa ta'ala. Applying riba or interest in the economic system could ruin the society economically and morally, as it has the ability to create selfishness, money worship, injustice, and cruelty due to its underlying mechanism, which exploits the weak and unpowerful people while benefiting only the wealthy group of people, thus widen the gap between the rich and the poor. This has strengthened the reason and rationality of why Islam prohibits riba and interest at the first place. But how exactly interest-based economy could create issues and problems in terms of economics and moral? Interest rate is a significant factor that gives a major impact on a country's saving and investment. since the interest rate is the cost of borrowing for investment activities and also considered as gain on lending in terms of saving activities, the change of it will definitely affect both of the activities. An increase in interest rate will automatically raise the cost of capital and restrict firms and business in venturing into new business activities, hence lead to a decrease in investment in the economy. This obviously gives a negative impact on the performance of huge firms as well as the small businesses, in which they will bear huge losses. An increase in the interest rate will decrease investment because among those people who make loans with the bank, some might borrow money for investment purpose. Hence, the increase of interest rate will discourage borrowing money for investment and subsequently will affect the whole economic growth. Furthermore, interest is a technique employed by wealthy individuals to generate more money at the expense of the poor that eventually leads to inequitable wealth distribution and exploitation of the needy. This is due to the event where the haves lend their excess wealth to the have-nots in exchange for further funds, then put the money toward their businesses or personal needs. When money is used for personal use, there is an additional amount to be paid as interest when it is returned. This indicates that the small amount of money saved by the poor will be transferred to the wealthy in the form of interest, which signifies that interest has generated an inequitable distribution of wealth. It is important to acknowledge that financial interest is strictly forbidden in Islam due to its unequal distributions of wealth between the rich and the poor. This clearly indicates the act of exploitation and worsen the poverty rates in the country. The high interest rate paid on the principal amounts indicates an act of exploitation where the fund owner makes no contributions but earns more than the fund borrower who works hard to ensure that the fund is used and yield. It represents a serious problem of poverty where the poor are becoming more impoverished that is not only a concern in developed countries but also in advanced countries. Instead of bridging the gap between the rich and the poor, it makes the rich become richer while the poor become poorer, thus widening the gap between the rich and the poor. By imposing an excess amount of interest onto the loan, this could lead to an increment of debt. This could lead to another lending transaction that happens when the borrower is trying to find more money to pay for the interest rate. Here, we could see the borrower is facing an addition of debt in order to settle for the previous debt. When the loan has reached its maturity, the borrower tends to pay the initial together with its interest rate. This can cause the borrower to be more in desire of money, so this is how interest rates could lead someone to have an endless amount of debt, and basically this is such oppression towards the borrower who was actually in need of money but end up having more debt in their account. Clearly, the interest rate is actually the higher concern, as we know in Islam, the applications of interest rate in addition to borrowed money is actually the act of riba. When we talk about debt, another thing to note is the interest rate, which is something very familiar with debt. In this context, when the majority of a debt is due, the lender should pay the principal amount of the borrowed amount together with the additions of n% of the interest rate that was agreed upon the contract. More specifically, in this context of interest rate, where the interest is being imposed on loans, it leads to the emergence of injustice and unjust value of exchange in a transaction involving money.
The last final issue would be economic instability. Interest stabilizes the economy. The rise and fall of the economy with an increase and reduction in an interest rate. Hence, interest distorts the economy to some extent. This is what happened in 1929. Wednesday, 23rd of October 1929, without warning, share prices are plummeting on New York Stock Exchange. To understand what brought about the crash, we need to go back a decade to time when American confidence grew so high that it seemed the good times would last forever. In 1919, the US had emerged victorious from World War. US economy that time was thriving. In the 1920s, everyday life was changing. Electrification transformed American towns were hooked up to the new technologies. Americans were now looking for new ways to get even richer. Since World War I, the US government had sold bonds known as Liberty bonds. This was a way to borrow money from the public, who in turn would receive interest payments on the bond's volume. Liberty bonds caused many people to become investors in securities for the first time. One man saw an opportunity that would change the face of the financial world. Charles Michel, president of National City Bank, spotted a lucrative gap in the market. Michel saw that investors had purchased a lot of government bonds during World War I. According to Michel, if people were willing to buy bonds to raise capital for the government, surely they could be tempted to buy stocks and shares to raise capital for private companies listed on the New York Stock Exchange, and they could make a profit for themselves in the process. By the mid-20s, around 3 million Americans were in the markets. It all started when people are greedy. People had so much faith in the bull market that they borrowed increasing sums of money to speculate on rising share prices. They are buying them with borrowed money. The quantity of money lent out was greater than the total amount of money in circulation in the United States at the time. Businesses were forced to close as a result of bank failures. 3,000 banks closed in the following couple of years. After that, the whole financial system seems not just unstable but worthless. This is because the Federal Reserve Bank of New York hiked the interest rate from 5% to 6% just weeks before the stock market meltdown in August. The stock market crash in 1929 did not create the Great Depression, but it did start a sequence of events that eventually culminated with the Great Depression. Many years ago, the Christian church institution respectfully took up the critique of usury as a cause, and the argument ranged on for well over 1,000 years. The decrees of the Old Testament were resurrected, and the New Testament reference to usury renders it by even more controversial. By the 4th century AD, the Roman Catholic Church had made it illegal for clergy to take interest, a prohibition that was extended to the laity in the 5th century. In fact, interest was seen negatively by Greek philosophers as well. Interests were criticized by well-known Aristotle, Plato, and other important Greek thinkers. Usury, which we might define as an excessive fee for the use of money or fungible goods, has always been tolerated by the Christian church. However, changing interest is no longer considered usurious in all circumstances. In truth, interest taking is not explicitly condemned in the New Testament. It is even encouraged in the parable of the talents. Interest from an Islamic perspective denotes simple profit that is not subject to trade. Interest, on the other hand, is now so well known to all of us and has become so institutionalized and accepted in modern economies that it's nearly impossible to imagine a world without it. According to Islamic scholars, solutions to the issues of interest can be based on these following basic concepts. If a person or a country intends to give money to another person or country for a charitable purpose, this conduct must be based on brotherly values. Therefore, charging interest in such a scenario is strictly prohibited. Countries will actually give aid and assistance to other countries if this important idea is used now, rather than sucking them into a pattern of dependency and debt burden. The second is that if a person wants to make more money with his money, he must be willing to put his money at risk. If he puts his money on the line, he is entitled to a portion of the earnings. This means he will have to accept losses if they happen. This is a system founded on the rule of law. It also has a lot of advantages. Due to our scarcity or lack of sufficient knowledge, many people in our culture still treat interest as if it were business. These two things, however, are vastly different. Like truth and wrong, business and interest are distinct. One of the best occupations for the persons living is business. This is why Islam has defined business to be holy and permissible rather than just holy or permissible. Fair and honest businessmen will be company of the prophets and truthfuls and the martyrs. The Prophet has spoken in this regard. Ibn Majah.